All right, what is up, YouTube? Back once again. So we're definitely going to talk about, waiting before you invest in the stock. You just don't, pick a point and say, okay, I'm going to invest right here. We want to wait 3 days if it's coming off all-time highs or if it's, hitting all-time lows. We definitely want to be aware or raise a red flag of why it's, hitting all-time lows. But, we want to be aware of, what the company is doing and, when does the company go back to regular trading. So, right now we're going to take a look at Twilio and we're going to take a look at others as well. So let's jump right into it. We're going to skip the portfolio part. I know I always break down a portfolio, but we're going to skip that part. So I'm just, show you my portfolio right quick. Brief overview. Kim Coors actually was able to, or Kim Coors was actually able to, break that $40 barrier. And, it really sucks because I sold majority of my position yesterday. So right now we're at that overbought period at about 40 to about $41 right here. It looks like it's going to get checked back down by daily moving average, or it could act as support. But as we see right here, it's definitely getting close to overbought. So we're pretty much, we can already tell that the stock is going to get checked right back down. But I do like the runs that it does go on. And so far, I'm seeing a correlation with the market being down and this running up. So this might be a hedge against the market. So let's go ahead and look at Twilio. We're going to look at the 1 year chart of Twilio. And as we see right here, it's definitely oversold. This is definitely on a I would say a weak chart. So right now, we're going to look at it from a 1 year perspective of it. We see that it's definitely oversold at $29. Now, what made me, because I really want to get in on the stock. Now, what made me back off of the stock is because, they're able to beat. So, okay, so following all the way up to this period, all the way up to the third quarter, they actually broke even. So you see right here, progress of, -8 cents, beating estimates, -4 cents, halving that, and then after that, breaking even. Now, this quarter was supposed to be the quarter they actually reported a profit. As we see right here, they didn't report a profit just yet. So, they missed the estimates and they also lowered guidance. Now, anytime a company does lower guidance, that's typically where you want to get out of the way for about 3 days or more until the stock can settle down. Because we see right here, over 20 million shares were traded, on that earnings day, or probably in between earnings and the next day after earnings. So people were waiting for this thing to break past that $35 level. Like I said, if we cannot get, that the stock cannot break past this handle right here, because the stock was setting up for the stock to break out and go higher. But since people were really optimistic and they reported a loss, and it showed that they had weak guidance, so they were expect a loss or somewhat weak profits throughout the year. This kind of scared investors, and it's made the stock gap down, pretty much see a huge check down. Now the stock did try to rebound right here on a dead cat bounce from about lows of about $24 back to 26, and after that the stock kind of fell back down here. So we're gonna try to test these lows right here, 24.15. The stock right now is oversold on the 1 week chart, so we might see a bounce up. But right now I'm steering clear of buying shares just right now, because this stock is a low float, so it doesn't take much for the stock to overreact. So we see 20 million shares to the downside of about 30%. So we definitely want to steer clear of that. And anytime, like I said, you see you see a stock that you see a value that reports a loss and then they report weak guidance, we steer clear of that for about 3 days or more until the share price can actually find a bottom. Because I know the first day and second day might look like it's going right back up, but people are going to be taking profits because they do want the stock to fall back down, because they don't feel confident in investing in a company that has missed sales and also gave lower guidance. So right here we see $22 and we spike back up to about 28. Now I'm pretty sure this was somebody making a huge trade on that, or probably placing a huge short. Now we see the stock kind of rise up right here, and then after that, the second day is simply where people are taking profits, and it falls right back down on the third day. Now the third day is typically when investors actually step in and say, okay, we had enough. Let's bid this thing back up, or let's go ahead and get long the stock. Now I want to wait all the way until Monday before I actually purchase a position in the stock, simply because I do believe in the name, and I do believe growth is there. Uber is definitely I would say a tenth of their revenue. And as you see, Uber has been gradually leaving the company because they are sending messages internally instead of using Twilio software. So we're gonna go ahead and look at Wynn Resorts. Wynn Resorts definitely is a really good company, and you never want to buy a company at all-time highs. So what I was doing, I was typically waiting on this company to actually show some weakness here, and we're backing off about $6 up or $6 down from the all-time high. We tried right here, all-time high of $20. It was rejected. Now what broke us out of here was that gap up all the way to 127, and now we're about to bounce back down on that support, which was resistance a couple weeks ago. So now we're back at that resistance level, and hopefully, we see some kind of bearish or downward trading coming right here that comes at about the support line, because I'm definitely interested in this company because they are producing results and they have raised their guidance for the end of the year. And as we know, casino stocks are definitely hot right now. So let's go ahead and take a look at APC. We talked about APC last time. We see the bidders are actually stepping in the stock. But as you see, oil has definitely fallen even lower. And oil dipped about $43 and bounced back up to 46 really quickly last night. And if you were not aware of that, definitely go check out the chart, the 5-week chart, or I would say the 5-day chart for that. So we see bidders are actually stepping back in here. The support level or the resistance level is about 52.38. What we have to get to break through there, we'll probably have to see some positive in the commodities to break us out of that resistance level. So we're gonna go Honeywell. Honeywell is definitely a long-term stock for me. What I'm doing, I'm sitting on my hands. Hopefully this thing breaks below the daily moving average, shows a bearish trade. But for right now, it is kind of stagnant and it's kind of sideways trading here and there because there's not a lot of selling going on, and also there's not a lot of buying going on. So it's not a lot of activity is really going on for this stock. As you see, activity has just about decreased, right here in the following days. So let's check out GDX. GDX was a position I did have. It kind of sucks because I did sell the position, a little bit too early. I was buying shares at about the lower 21 range. And after we broke 21.14, that's exactly when I dumped shares. And I was like, okay, we're not going to hold it for no technical low because I was in class and I wasn't paying attention to the contract. So that was the decision that I did make for that. Now, we see the daily moving average approaching about 22.45, so it still might have a little upside to it. But, this still might be a bullish trade setting up here, but we're going to take a look at gold commodity and see exactly what's going on here. So we see, a curve in the RSI letting us know the buyers are probably still coming back in here. And as we see, support is actually holding up for gold. So, like I said, the technical analysis is definitely, paying its profits because we see the technical analysis showing us where the bottom is for gold. So we want to pay attention to technical analysis, pay attention to the contract, not the ETF. And that's typically how we're going to leave it at that. Remember, ETFs only tell us half of the story. And we're going to go to emerging markets. And this typically is a broad-based investment over global. I would say globally a broad-based investment. And if you look at the website or iShares website about the double EM, and typically they give a breakdown of which sector are they heavily invested in. So I'm gonna read it off the website. China is about 26%. South Korea is about 15%. Taiwan is about 12%. India is about 8%, and so on and so on. So we want to pay attention to that. In other words, instead of doing the regular stock, we can add some leverage onto it and play in the EDC. But I would only buy this stock on a pullback because we see right here, $80 is definitely giving us a problem right here, and we're about $7 or $3 away from hitting all-time highs. If we would have bought it right here, $40 would have been about 100% on our gains. But right now, there's nothing globally going around that makes me want to buy right here. Right now, we're sitting on a daily moving average as well. So typically, I'm going to keep an eye out on this before I actually make a decision and buying the stock. So remember, like I said, we pay attention to the geopolitical risk. We do our homework, our research. We do the technical analysis, and we also want to pay attention to how the stocks are moving and the news that are coming out for stocks. And also, we want to pay attention to what political news and geopolitical news means for the market. Now, I know some stocks, trade inverse or exactly with the market. We want to pay attention to stocks that that don't need the market to move. So say like the market is down 10% or I would say the market is down 1%, but your stock is steady climbing, 3%. And also, when the market is up, it's still, it's still a climbing stock. So anytime you get a stock that, diverges away from the market and goes up and down, regardless of what the market is doing, we want to pay attention to those stocks as well. So we see, this is up about 1%, and the market is barely green. There's still some indexes that are red, but we want to pay attention to stocks that are definitely turning green. Kim Coors is definitely a stock that we want to keep an eye out on, because now we're approaching that overbought level. And now, this is a growth name. We want to pay attention to growth names. We see exactly what happened. This is about 100% up from the IPO. It IPO about $20, fell right back down to $5, and now, we're up about 100% since IPO. Now, in shares about $39. Look to increase my position later on, but for right now, the daily moving average is acting as heavy support right here. I know the stock has to get checked down at some point, so this is exactly why I eliminated my exposure to the stock. But I wasn't expecting for the stock to break 40 this fast and run up all the way to $41 and come back down. But with that being said, chemicals are definitely the play for me. And when I focus on growth, it really doesn't matter what sector I go to, long as it's a growth name and it can actually produce me some profits, and it can actually produce the company some profits and show profitability long term. So like I said, Twilio is it falls under a growth name, but right now they're kind of stagnant because they took a hard loss with Uber leaving them, and that's hurting their revenue and hurting their profits. Now, with that being said, that's all I have for you guys. If you have any questions on any stocks, definitely hit me up in the comment section, so that way I'll know how to address the comment. But we pay attention to earnings because the earnings season is still going on. And anytime you get a stock that's on a discount, or anytime you see the RSI showing that it's oversold, pay attention to what the forward outlook for the year is, and pay attention to what pay attention to what was said in the conference call or in the financial report. So with that being said, guys, take care. Have a good day.